Welcome to Chairman's Briefing, your source for mining industry intel. I'm Rachel Lee, ready to dissect the week's biggest developments. With gold bars typically weighing about 400 ounces and the spot price of gold settling in the $2,500 zone, a bar of gold is worth a cool $1 million for the first time ever. A major factor that has supported gold's rally this year is central bank buying. According to a Bloomberg calculation using figures from a consultancy called Metals Focus, central bank net purchases of gold stood at 483.3 tons, which is equivalent to almost 40,000 bars. Chinese exporters and traders are increasingly turning to yuan and gold as a hedge against expected U.S. dollar depreciation. This shift has been further fueled by recent actions from China's central bank, which has tightened restrictions on local government bond purchases. Additionally, the ongoing crisis in China's real estate market has prompted individual Chinese savers to view gold as a more attractive option for preserving their wealth. These factors combined have contributed to a surge in demand for gold from Chinese buyers, both at the corporate and individual levels. After reporting stellar Q2 earnings, the majors are putting on quite a show, demonstrating clear bull market behavior via multiple consecutive daily advances. Some are tagging fresh 52-week highs. The first chart here is Agnico Eagle. But many will argue that the equities continue to lag the metal's price strength and that the sector is seriously undervalued. As equities continue to draw interest and more capital is mobilized from the sidelines, the days of being undervalued should quickly fade. The next chart here belongs to mining behemoth Newmont. The union at Chile's Escondida copper mine, the world's largest, signed a deal with BHP rather quickly, ending a strike and reaching an agreement over compensation. A union lawyer had termed the agreement its greatest recent victory. It gave each worker a bonus and an interest-free loan of about $34,000, compared with BHP's original offer of about $28,900. Now, without a doubt, union heads that represent labor forces at some of the larger mines around the world are market savvy. They're well acquainted with trending metal prices and are setting their sights on a bigger piece of the action. Analysts are now watching whether Escondida will set a precedent, but say that other mines in Chile are not necessarily in similar situations, such as those that are smaller or handling bigger problems with production and costs. While BHP may have settled its drama, the strike at Lundin's Caserones copper molybdenum mine in the Atacama region of Chile is dragging on for over a week. According to union head Marco Garcia, things are starting to get complicated at Caserones, adding that output is at less than half capacity. Garcia says he hopes Lundin will reach out to the union sometime this week, and Lundin did not immediately respond to a request for comment. Mexico's lower house of Congress approved 2 constitutional reforms that could prohibit open-pit mining and fracking. These game-changing proposals are part of President López Obrador's grand plan to reshape Mexico's landscape. President Obrador has criticized mining contracts with private companies signed by his predecessors and says that his administration has not granted any new private concessions in the sector. But the mining industry is not taking this lying down. The Mexican Mining Chamber warned that the ban would cause a 1% contraction in the country's GDP and threaten some 200,000 jobs. For next steps, the proposals will be taken up for further discussion by the full lower house after lawmakers return to session in September. G Mining Ventures reported that first gold exports from its wholly owned Tocantinzinho gold project sold over $2,400 per ounce. The project remains on time and on budget for commercial production in the second half of 2024. Proven and probable reserves at Tocantinzinho currently stand at just over 2 million ounces at a grade of 1.31 grams per ton gold. Now, during its 10.5-year mine life, Tocantinzinho is expected to produce 1.83 million ounces of gold, averaging 175 ounces per year. ASX-listed Pilbara Minerals will gain full control of Latin Resources' flagship Salinas lithium project in Brazil, along with exposure to the growing North American and European battery market. Under the terms of the all-paper deal, Latin Resources shareholders will receive 0.07 Pilbara shares for each share held. Based on Pilbara's closing price on August 15th, the deal represents a 66.7% premium to Latin Resources' recent trading range. While Latin Resources soared over 50% in their biggest one-day percentage gain since April 2022, analysts at Citi had mixed feelings about the deal. While this is a mining-friendly jurisdiction, the challenge will be convincing the market that diversifying into Brazil makes sense with the less than stellar track record from ASX miners. Robert Friedland's Ivanhoe Mines announced that its Phase 3 concentrator at the Kamoa-Kakula copper complex in the Democratic Republic of the Congo has reached commercial production. In addition, the Kamoa-Kakula's Phase 1, 2, and 3 concentrators achieved a combined monthly production record of nearly 36,000 tons of copper in July. BMO Capital Markets mining analyst Andrew Mikitchuk said, quote, "This feat extends Ivanhoe's solid track record of delivering projects ahead of schedule. We see a strong production with record quarterly performance in this year's second half for Ivanhoe." On a standalone basis, the Phase 3 concentrator is expected to produce approximately 150,000 tons of copper per annum. With the addition of the Phase 1 and 2 concentrators, total copper production capacity at Kamoa-Kakula is expected at 600,000 tons per annum, making it the third largest copper mining operation globally. American Eagle dropped a set of assays from its project in the Babin copper-gold porphyry district of central British Columbia in the pre-session hours of Wednesday, August 20th. Now, the market was less than happy with the results, but some market observers questioned the severity of the sell-off. The American Eagle channel over at CEO.CA has been fairly active with commentary since these results dropped. Not surprisingly, those with the bullish lean towards the project and its highly competent management team view current weakness as a buying opportunity. We've covered the Victoria Gold story weekly from the get-go. In last week's briefing, we characterized the company as potentially bleeding out. Since then, the board has quit and the CEO is out. Now, this puts the Yukon Territory in a difficult position. Without the flow of tax revenue from the Eagle Mine, the largest gold mine in Yukon history before the landslide, government coffers are likely empty. Action is required to revitalize the critical revenue stream, and the Yukon government hopes that mining can eventually restart at the site of the Eagle Gold Mine disaster, despite calls from the Nacho-Naik-Dun First Nation to stop mining activity on its traditional territory. The Bureau of Labor Statistics dropped a bombshell. They're looking at revising job numbers down by a whopping 818,000 for the year through March. That's about 68,000 fewer jobs each month than reported. This isn't just a small adjustment. It's the biggest downward revision since 2009. Why the big revision? It could be due to how new businesses, closures, and even unauthorized workers are counted. The revisions may reignite angst among markets and economists that the labor market is deteriorating much faster than originally thought. Metso, a big player in mining equipment, has just inked a major deal with Reko Diq Mining in Pakistan. Now, this isn't just any project. Jointly owned by Barrick Gold and Pakistan, it's one of the largest undeveloped copper-gold projects on the planet. Looking ahead, Reko Diq is expected to run for a whopping 40 years, processing about 90 million tons annually when fully operational. Circle 2028 on your calendars. That's when they're aiming to start production. And Ford is delaying production of a next-generation all-electric pickup truck at a new plant in Tennessee and canceling plans for a 3-row electric SUV. But they're not giving up on EVs entirely. Instead, Ford is shifting gears to focus on hybrids and electric commercial vehicles. We're talking a new electric van in 2026 and 2 EV pickups in 2027. Why the change? Well, Ford CFO says that they're following the market and playing to their strengths in trucks and SUVs. This pivot comes with a price tag, about $400 million in write-downs and potentially $1.5 billion more in expenses. But Ford's betting that'll pay off in the long run with a more profitable EV business. They're even planning to update investors in their electrification strategy in early 2025. And there you have it, another week of mining highs and lows. Make sure to subscribe to get these insights delivered to your inbox every Thursday, or if you prefer your news here on YouTube, smash that subscribe button and bell notification for us. Thanks for being a part of Chairman's. We'll see you next week.